Hi, and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will discuss what geometry has to do with investing, and afterwards I will give an update to my portfolio as well. So let's jump straight to geometry and what geometry has to do with investing. So first of all, geometry is a branch of mathematics that studies the size, shapes, position angles, and dimension of things. So perhaps the most well-known shape is this one that I'm showing you on the screen right now, namely the pentagon. The reason for this is that it is also the shape of a very iconic building in the United States that houses the Defense Ministry, which have 5 sides. If you then continue to a hexagon, then you can see we now have 6 sides. If we skip the heptagon and go straight for the octagon, you can see that there are now 8 sides. But perhaps much less known in the investing community is the next one, namely portfoliogon. So this relationship between geometry and investing is mainly made as a joke from my side, but it gives me the possibility to share how the S&P 500 is doing year to date. And you can see that we are down more than 16%. And whenever this happens, people start to ask themselves some really weird questions regarding such a thing as, is fundamental analysis actually a thing that works? Maybe this time is different. And you have also seen people who have previously been tremendously successful, then all of a sudden, once the market starts to correct, well, all of a sudden those people are not so successful anymore. A good example of that would be to look at the ARK Innovation ETF. You can see here from the lows in March 2020 and to its peak in 2021, it was up around 400%. But if you look at it year to date here, you can see that it is down more than 55%. So whenever it comes to investing, you must have focus on the long term. The next point that I would like to make when you look at this portfoliogon scenario is a lot of people want to take a tremendous amount of risk as long as the market is increasing. But once they start to see a figure that looks like this, and if that is their portfolio, then all of a sudden these people would say, no, I would never be comfortable with taking this amount of risk. But when that happens, it is already too late. So you really need to be aware of how much risk you want to take before you start doing your investing. If we then compare this to my portfolio and why it is so key for me to show what I am doing and why I am time and time again emphasizing that just because I'm doing something doesn't mean that you should do the same, it's due to this fact that perhaps I'm willing to take more risk, or perhaps I'm willing to take less risk than what you are comfortable with. There is no right answer that fits everyone. It is really a personal choice, and no one besides you can tell you what you are comfortable doing. If we then continue to my portfolio, well, the first thing we notice for this week's episode is that there was a red circle, meaning that the portfolio value is down compared to last week. We go to the portfolio values tab, you can see that my portfolio is down $200 compared to last week. If we then go back to the overview arc here and scroll all the way to the top, just to once again emphasize that my entire portfolio consists of individual stocks. And that is because I feel more comfortable buying into individual businesses than I do by buying an index fund. Because if I buy an index fund, then I would invest a lot of my money into companies which I currently believe is too richly valued for my personal preference. I don't think that there's anything wrong about doing that if you do not want to spend a significant amount of time trying to find undervalued businesses and are actually interested in learning more about businesses. There's nothing wrong about being a lazy investor and putting your investments on autopilot. There is no one size that fits everyone. but this is just my personal preference, which I'm showing to you. If we then continue to my favorites tab, namely the dividends tab, then we can see that this has been a pretty good week since I have received around $220 and they came from General Dynamics and Activision Blizzard. So I'm actually expecting May to be my best dividend month so far, because if I compare to February, since the majority of my companies are paying out a dividend every quarter, and then on top here in May, I'm receiving this annual payment from Activision Blizzard, well, then it seems that that is a reasonable expectation to have. And finally, if I should try and answer a question which I have received time and time again, especially during 2022, which is, do you think this is the bottom of the market, or do you think that the market might go even lower? Well, I would say that there are two kind of approaches to try and answer this question. So the first one would be try to focus on the facts. What is it that we all know? We all know that currently there is a pretty high inflation. We know that the Federal Reserve is trying to fight inflation. What are they doing in order to do so? Well, they are increasing the interest rate. So what happened when you increase the interest rate? Well, you are slowing the growth and you are discounting future cash flows much harder, meaning currently you will favor businesses that are already making cash and are capable of paying down their debt much faster. So companies which have a lot of leverage are all of a sudden not that attractive. And at the same time, if the interest rates are going up sufficiently high, well, then all of a sudden there will be an alternative to investing in stocks, namely government bonds. And the second approach you can take would be, well, everything that I just stated, for the first point, everyone knows this. So whether or not this is the bottom of the market, I have absolutely no way of knowing. So instead, focus on the business that you're trying to invest in. Make sure that you think that you get a good deal for your investment. And if that is not the case, then you will simply wait until that is the case, instead of trying to figure out whether or not this is the bottom of the market. And when you look into my portfolio, I think it's pretty clear that I'm trying to follow answer number 2 here. So that actually sums it up for yet another exciting week of the Lazy Money Game. So hopefully you found it entertaining to see how you could use geometry when it comes to investing. At least that was the intention from my side. You saw an update to my portfolio, and finally the question which everyone wants to know the answer to, namely whether or not this is the bottom of the market. And based on my answer, you could see that I truly do not believe that anyone can successfully answer that question. So if you have enjoyed the content, then please consider leaving a like to the video. It really helps out the channel a lot. And until I see you next time, bye!